So welcome to the Armchair Trader podcast. And this week we have quite an interesting company, one that we have touched on briefly before, one that is creating quite a lot of interest in the UK investment area and further afield, and that is Supply at Me Capital. And on the show today we have Alessandro Zamboni, who is the CEO, all the way from Italy. So welcome to the Armchair Trader, Alessandro.
Thank you, Stuart.
There will be some people listening to this podcast who don't know the company. I don't know whether you want to just give us a quick introduction to what you do and why it is a revolutionary concept, certainly something that has interested us because it's not something we've come across before, but it is something that I think has a lot of momentum to it and is going to be something we'll see a lot more of going forward. So can you give us a quick summary of the business and how it works?
Yeah, sure. Thank you for your time. Firstly, yes, Supply at Me is a fintech initiative that basically is a particular fintech because in reality, Supply at Me create a new product in a space of a working capital facility. In particular, you know that the market now is focused on trade receivables, supply chain financing, trade finance. Supply at Me is different. Supply at Me is focused on inventory. So the need of a business owner to free up cash from their stock, selling the stock to the platform. And so the key point is that is not financing. So two big innovations. Firstly, the area that is not receivables or supply chain financing, but inventory. The second one is that it's not financing, it's a commercial facility. So for a client company, it's not a debt.
So could you give me an example of how a specific business would use your business to manage their inventory and make sure that they're using it effectively?
We are working now across several sectors. So our initiative is not only focused on a specific sector or specific product. And so an example could be that a toys producer or toys trading company that basically buys toys from China and then distribute the toys across several regions in Europe. Actually has the so-named days in inventory. So the lapsed time that a company has to manage before waiting the sales to the customer. And so what can do a business owner, a company? Once they buy the toys from China and the toys arrived in a warehouse of the company, the European company, the client company, the corporate can sell the toys, the goods to the platform, monetize through an invoice the sale, and wait and keep to continue the management of the physical possession of the toys, waiting the sales to the existing customer. So basically, they advance the future sell because they sell firstly to the platform. They continue to manage the goods in their premises, and when they sell the inventory, the stock, the goods, the toys to the end customers, repurchase the toys from the platform. Is a flash repurchase in order to realign the facility. And the process continue in the same manner. So in a perspective of the business owner, is an alternative to the equity injection because there are not in the market facilities that allow a business owner to sell their stock, their inventory to third party through an invoice. There are financing facilities but are very limited in the scope. So it's a revolution in a perspective of this toys manufacturing or toys trading company.
Can you say what sort of companies you're working with? Are you working with any particular sectors, or is this does this have a very broad appeal as far as potential clients are concerned?
Yes, we now we are working on 16 sectors. We can see that we can say that we can't work in non-ethical sectors like alcohol or other ethical non-ethical sectors where our investors, our inventory funders, don't allow the platform to monetize. By the other hand, we can work in across among several different sectors from parapharmaceutical, capital goods, metals, foods, consumer staples, livestock. I give you the poles, opposite poles, but basically there is a real proof that our service is helpful for several companies.
And is it something that is used for companies that are trading across border, or can this be used also by companies that are focused primarily on one particular national marketplace?
We can work with also companies that sell or are exporters or importers. The key point of the product is that we monetize inventories that are on premises of the client company. And since we are seeing also opportunity to monetize the phase earlier, so when an inventory is in transit, is the reason because we are closing the acquisition of another fintech company based in Singapore. The name is TradeFlow Capital, in order to have basically an end-to-end inventory monetization service.
Correct me if I'm wrong, but basically what you're talking about here is something that's a little bit similar in concept to the original futures market, which dealt primarily with commodities. But in that market, again, there was an emphasis, and still is an emphasis, on having the actual physical commodities in a warehouse, and that futures contract is based on those physical commodities. Here you're talking about doing something a little bit similar, but again, whatever the physical goods are, they've got to be sitting in one of that company's warehouses or on that company's facilities.
Yes, the revolution is that we can monetize not only commodities, because the market, and investors, banks are experienced in commodities because they consider commodities a liquid asset. So with the secondary market, the opportunity to hedge the asset and so on. Our different and revolutionary service can monetize also illiquid goods. We are in for a period of illiquidity investments, and we Supreme basically allow a company to monetize also other type of goods, like my example, toys, wine, parapharmaceutical goods, metals, livestock. So all goods that basically in a old style commodity finance industry is considered a not liquid investment, not liquid asset.
This sounds like an incredibly good idea. And when I was looking at the company more closely, I just wondered why a consortium of banks hasn't done this already. What has stopped, the big banks in the trade finance space from getting involved in something like this, or building something like this themselves?
Yes, my background, also my history, I'm an expert of banking regulation, banking processes. My background, I worked 20 years in an advisory company that improved risk management projects, so credit rating project and similar. And the key points for a bank is that there are two key points. The first is that the inventory is not a real eligible collateral in the credit risk management models. So there is a penalty, in order to use as collateral inventory. Second one are all the very specialized processes that a bank has to put in place in order to assess and monitor the inventory. Banks, as a legacy problem, need now are managing their transformation plan, digital plan focus on payments, maybe invoice, receivables, and so the inventory is a very specialized area. I can spend you a couple of figures. In Europe, there are nearly a market of nearly 85 billion of euros of related to receivables, and there are over 2,000 players, banks, fintech platform, and so on. The inventory market is over 2 trillion, and we are maybe 4-5 players that can basically fund the inventory from a client company. This is an opportunity from one side, but is also the proof that is a very specialized area. It is also our competitive advantage.
Talking about supply chains, we've seen obviously a lot of supply chain disruption because of the pandemic. We've seen that impact directly on things like, for example, the semiconductor industry, the availability of laptops in the UK. I've seen a number of other areas where supply chains that we all got used to are not working properly. Prices are being affected. Goods are not being made available. Do you think a solution like this is going to become more valuable now because companies are now aware of what can go wrong and how disruption to supply chains can potentially put entire companies out of business?
Yes, I think that now, as you know, there is a reshaping of the philosophy, the trajectory of a supply chain management. So we are moving from a just-in-time approach to the just-in-case approach. So we have obviously we didn't establish Supply.me because we saw the COVID, but now we are seeing this really reshape because in a supply chain there are in particular specific peer of the supply chain that needed to increase their stock in order to allow the business continuity in favor of a big buyer of the anchor company of a supply chain. So I think that our solution has a great fit to the current and upcoming needs of a supply chain, and is also the reason because thanks to also the Singapore acquisition, we can offer an end-to-end monetization service.
I mean, with that kind of end-to-end specialization, is that something that you can also bring to bear on something like the commodities market, for example? I know that that is relatively liquid and relatively efficient, but as we've seen, for example, in the oil business, even the oil business has had some issues. But having said that, there are some areas of the commodities market that are a lot less efficient, as you say, more illiquid. Do you think that this could be a solution for those areas of the market as well?
Yes, I think that firstly, a company that has to understand that if you use a Supply.me monetization service, they can have no problem related to the financial position or problem related to the willingness to get more credit, because we are not a bank. Our facility is a commercial facility. So anyway, our service will be a competitor of the existing credit lines or documentary trade finance transactions or similar. Secondly, our expertise is spreading because thanks to the Singapore trade flow capital acquisition, our area of expertise will also cover the commodities. And so the platform can monetize commodities also through a typical scheme of trade finance transaction with two players, so the supplier and the buyer, or also a standalone monetization if a company has in its premises commodities of finished goods or raw materials.
Can you tell us a little bit more about that acquisition and what that brings to your business, the rationale behind it?
We saw the opportunity to as a sort of end-to-end monetization services. So my view, and also the view of our directors, is that a company has two needs. One is once they purchase the inventory, the goods from the supplier, and we are on the typical trade finance or trade transaction, international transaction, and so they could need, a company could need to be funded in the first phase of their cash-to-cash cycle, and then once the goods are arrived in the premises, they need to monetize the days in inventory, waiting the sales to the existing customers. And we think that if a platform can support both phases, has the opportunity to clinch agreement with the client company, also the supplier, in order to have basically a competitive advantage to support and to deliver support the monetization of the two phases. Initially, Supply.me was focused on the inventories on premises. And Trade Flow Capital, the name of the Singapore fintech, is focused on an inventory in transit. So the traditional trade finance transaction through a non-credit approach like Supply.me. And so we saw a very great synergies in order to integrate, combine the two products. The other synergy is on the funding side. Since Trade Flow Capital has already a fund in place, we saw also the opportunity to integrate, to use the existing fund, extend the existing fund via new compartments, and so has also the opportunity to foster a new asset class to the investment community.
And this is obviously quite it's a bit of a departure for you, because your company started off in Italy and has grown up in Italy. Now there's this Singapore deal as well. Can you say a little bit more about what your geographic strategy is? Is it that you're going to start dealing more with European companies, or how do you see the company developing and expanding internationally over the next couple of years?
We have to say that we started in Italy, but all the companies, as you know, are exporters. So our client companies, Italian client companies, are exporters, so are involved in international cross-border supply chain. Now, so we studied the product not only for Italian market, but we knew very well that the facility, the commercial facility, will be used for several, in favor of several geographies. Now we have in place several different countries where the platform is operating: the Italy country, UK, Middle East, thanks to the IMAS investment partnership, US, and we are seeing opportunity in other countries of Europe, because the model is the same, is a high scalable. And thanks to the Singapore guys that we are going to acquire, we can extend, we can cover the last geography, that is East Far East. So it's a global platform actually.
Has Brexit been a factor for you at all? Has that had any impact on you? Because you have mentioned that you are now dealing with the UK quite a bit as well.
We studied and analyzed the Brexit risk before the decision to move from Italy to London as a headquarter, and we now think that we are not seeing a particular impact, because actually the platform works with segregated vehicles in each countries, and so there are not any cross-border constraints or cross-border problems. So if I have to purchase an inventory in UK, I use vehicles based in UK, so that can gain traction from the existing regulation. I can say that there is also opportunities thanks to Brexit, because I hope that the UK, London, will be more and more the fintech home, and also new opportunities for a fintech to have, for instance, a dedicated listed compartment. I saw that there are several initiatives around this point, and so we hope that the Brexit, paradoxically, will be an opportunity for our PLC listed company.
You've mentioned previously in some of your communications to the market a captive bank operation. Is that's not the same thing as the Singaporean operation you mentioned already, or is that a separate side of the business?
Yeah, it's another business stream of our strategy. As I was saying, I'm an expert of banks, and also being an expert, I think that a bank could be specialized or become specialized in a specific product. And you know that bank now has problem that they get cash at a very lower cost, but they have problem to use the capital in specific investments or credit exposures. So we think that Supply Me, the platform, give an opportunity to a bank model, a traditional plain vanilla bank model, to spread the lower cost of funding through a very interesting form of investment that are our monetization notes with underlying the inventories. And so we decide, in partnership with Quadrivio Group, that is a Luxembourg leading private equity fund, to develop a captive bank or bank initiative that basically will be a bank related to the platform, that will be a special partner of the platform, in order to allow the platform to have a fund at a lower cost, and also to work alongside other global asset managers that now definitely want to invest through the platform. So it's a way to reduce the cost of funding, is a way to give more trust, more comfort to the global asset managers, because you know that Supply Me, in the perspective of investor of a fund, is a new asset class that needed to manage a strong, deep due diligence before any investment decision.
What you're saying is that if I was a fund manager, the securitized inventory is in fact in itself a different asset class I could invest in, rather than just getting exposure by buying shares in Supply Me. I could actually buy shares in some inventory.
Exactly. The point, as you know, that the market, also in a securitization market, has as underlying receivables, leasings, mortgage, credit card, real estate. But you know that there are not any securitization with underlying the marketability of inventories. So the power, the performance of the platform, that is Supply Me, to purchase inventories, to monetize, and also to manage the opportunity to have a profit from this kind of inventory trading. So in a perspective of investor, is a really new asset class.
It's also quite interesting that you have a Sharia strategy, because this is Islamic finance is something that we follow on the Armchair Trader from time to time, and I thought it was quite interesting that you have developed a Sharia strategy as well at relatively early stage in the company's history. This is usually something that many companies start looking at once they are much further down their road of development, if they're in the finance space. What was your thinking behind launching that at this stage?
I think that talking about Sharia, the Sharia platform, our mission, since the demand of our service, as you can understand, is huge, is growing month by month. My mission and the mission of the directors is to find a multi sources of funding, and the Sharia is an opportunity to create a sort of bridge between client companies and Islamic finance in order to support the real economy. And at the day one, our platform actually was already aligned to the Sharia principles. So because it's not financing, we don't ask any interest rate. We allow a company, a business owner to outsource basically their unsold risk. And so all these principles are fully aligned to the Sharia Islamic finance principles. And so we had the opportunity also through a suggestion of our Sharia funding specialist, that is a global European bank, to adapt, to fit in very simple way our platform to the Sharia principle, also using a very well-known scholar board. And now we hope that in the next months we can also promote officially to the Islamic finance industry again this new asset class of investment, and so get more funds in order to fund our portfolio of companies.
Basically, this sounds like you're definitely moving ahead with a very interesting and novel approach to helping to finance international trade in many respects. Is there anything else that you're able to tell us in terms of your future plans for the company? I know there's probably quite a bit that you aren't allowed to talk about, but if there's anything else you think possible investors might want to hear about, that would be great.
Yes, I think that we used the 2020 last year to create the fundamentals, all the strategic partnership in place. As you think, you are thinking, I suppose, in less than 12 months, we created a lot of streams, partnership, synergies, strategic directions, and so on. And I think that now is the time to deliver. It's the time to be concrete, to generate revenues, because now the platform generated the revenues thanks to the due diligence. That is also a great proof that companies want our service and pay the due diligence fee. But now investors, shareholders, or potential investors has to know that we are on the delivery phase, and we want to be concrete and to give the concrete results of the investment made last year.
Well, thank you very much for making time to come on the podcast, and we will certainly be paying close attention to the development in the company over the next year or so.
Thank you so much.
You've been listening to the Armchair Trader podcast. To get up-to-date commentary on what's happening in the share markets, both in Europe and North America, and our views on some of the emerging investment stories in the small cap space, make sure you check out www.thearmchairtrader.com and sign up to our free daily newsletter.